Stock markets are constantly moving erratically. It has become a chore to be able to monitor and understand the movement and the ripple effect. While there are thousands of important indicators, some offer more information and usefulness than others. This one chart can be compared against so many others and tell us a grand picture of what is really going on and where we can expect it to go. You came here for the truth, so let me unveil that for you. Today, let's get into this one indicator. I believe it is absolutely crucial. I'm going to show you comparisons to other indicators. Let's begin. Well, what is it? We are looking at the Wilshire 5,000 Total Market Index, a very important indicator, and you can see over the past few years that it has gone sky high. Let's get into the breakdown of exactly what this is. The Wilshire 5,000 Total Market Index. It's widely accepted as the definitive benchmark for the U.S. equity market and measures performance of all U.S. equity securities with readily available price data. So we're looking at basically a total, an overall view. You know, when you look at the NASDAQ, you get a particular picture, or you look at the Dow Jones, you look at the S&P. But what about everything altogether? That gives you a much wider spectrum. Sometimes it's important to look in depth at one particular stock market or one particular sector, or even further drilling down into the stocks themselves. But sometimes it's more important to get that wide view, and that's what the Wilshire 5,000 does. Looking at the Wilshire 5,000 versus employee year-over-year change in earnings, and it is very clear that a few decades ago it was a lot different than today. And you will see that this trading range where it's in essentially is something that has been continuing, and it seems to be approximately, at least in the last few years since the financial crisis, always below this 3% mark. Previously, back in the 70s, you can definitely see that earnings were doing quite well. Ever since that introduction of low interest rates that you can clearly see by this line going down, pretend that's the Fed funds rate, it has shown us that has taken away from these earnings that individuals have gotten. Now, of course, there are many more reasons for that, but that seems to be the way it is anyway, compared to the Wilshire 5,000. Corporate profits versus corporate tax revenue. This is interconnected in with that. And you'll see that despite the fact that corporate profits just continue to increase and increase and increase exponentially, mind you, you could see that here, the corporate tax revenue is down. Yes, it is going up, but to so much of a lesser degree than the corporate profits. And it just seems that they're able to keep their profits overseas, and they're able to use loopholes. They generally have a lower tax bracket, and this has allowed them to increase their corporate profits. Then we look at this. The Wilshire 5,000 versus the 10-year Treasury. Is this, they ask, the greatest bubble ever? All right, look at this though. You're looking at a consistent decline. That is the 10-year Treasury. And when you compare it to the Wilshire 5,000, you're seeing basically the exact opposite trend. And that's important to note. We need to see the trends, and when they break trends, that is exactly when we need to be worried. So at this time here, you will see that death cross. You will see this sort of schism, which is formed in between the two, and that is important to note. They also make a few points here, basically considering it's a bubble at this point in the dot-com boom. They're saying it's a bubble back in the 2008, and look at it today. Apparently it's not a bubble, and of course we are definitely far beyond the word bubble. Way, way beyond. All right, one last one here just to show you the new America. ZERP, zero interest rate policy, enables federal debt, enabling jobs growth, so they say. And what this has allowed for, you look at the Fed funds rate since the financial crisis, it's at the bottom, okay? It's basically at zero. Simultaneously, this has caused a massive amount in federal debt as well as jobs growth, supposedly. But really, is it? And what we will see is that, the jobs come, as you've seen, temporary workers, and they oftentimes are working for the government in some sort of way. They're not necessarily good jobs at all, but they're able to hire temporary workers, and they are doing so at a higher rate more than ever. This is just one chart which depicts that. So I will say that you can take the Wilshire 5000. So you go to a search engine, type in Wilshire 5000, and you will get all different charts that will compare them to all these other different indicators. And I do believe it is important. In fact, you can do this with any type of one of these charts. You can say S&P 500 versus, and you will get other charts as well. So always don't take it at face value, but compare it against something else. When we look at a commodity, whether that is gold or oil or anything else, we see a number. We see, let's just say, $1,000 per ounce of gold. But that is rated against the US dollar. But what happens when you rate that same gold in a different currency? Perhaps right now at this time, you're looking to Venezuela, how they price their gold. Well, all of a sudden, gold looks like it's going up and up and up because of the devaluation of their currency. So always measure against something else as well as taking it at its face value. Both of those are important. If you found this video informative, please give me a thumbs up. This is all part of the Money GPS eCourse, which is a free eCourse that I've been doing and collecting more and more videos on this to educate the public, to inform people about the basics and then the more intermediate levels of finance. I hope you do appreciate that. If you want more information, head over to my website, themoneygps.com. I have the whole free e-course there. You can also see it on my YouTube channel as well. If you want to see the e-course, you can just go to themoneygps.com and there'll be a little image there that will say free e-course. You can see that. There's hours and hours of free content on there. And of course, if you found the video informative, I know you will find my book, The Money GPS, even more informative. So just head over to Amazon, where they have a look inside feature that will allow you to flip through the pages of the book and see if you like it. Take care.